Hey everyone, welcome back to Corporate Decoder. Today we're diving into MOOG Inc.'s latest financial filing. It looks like we'll be decoding some movement, which is ironic because MOOG makes stuff that moves, buckle up. We're taking a look at their report from late April. This report tells us how well they did in the quarter ending in March. The company released a statement discussing how things went during the quarter. Basically, we're getting a peek at their income statement, balance sheet, and cash flow statement. These are the report cards for how well the company is doing. MOOG has two types of stock, Class A and Class B, both traded on the New York Stock Exchange. It's not important for us to know the difference between them right now. The company's board of directors declared a quarterly dividend, so they are sharing some profits with their shareholders. The dividend is $0.29 per share for both Class A and Class B stockholders. If you owned 100 shares, you get $29. The payment went out in late May to those owning stock in early May. Alright, let's dig into the numbers. The report includes a press release about their results of operations, which is where we find out if the company made money or lost money. Let's go directly to the press release. It should have the core financial information. Here we go. This press release gives us an overview of how MOOG performed instead of going through every single detail. Let's hit some of the key numbers. This is like reading the headlines of a news story, focusing on the stuff that matters. First up, net sales. Net sales means how much money the company made from selling its products after subtracting any discounts or returns. This is a key top-line number, as Warren Buffett would say. It tells you how much the company is selling. MOOG reported net sales of $854 million for the quarter. Now, $854 million is a lot of money, but it only tells half the story because we need to compare this with the prior amount to know if the company is growing. Last year in the same quarter, their net sales were $799 million. So the company sold about $55 million more this year compared to last year. That's not too bad at all. Net income is the profit left over after all expenses have been paid. It's often called the bottom line. MOOG's net income was $58 million. Again, is that good? We need to compare. Last year in the same quarter, their net income was $46 million. That means their profits went up by $12 million. That's solid growth. They sold more and were more profitable. Looking at the different parts of MOOG, their aerospace division saw a significant increase in sales. Aerospace sales went up by 12%. That's pretty significant because aerospace is usually a pretty consistent and stable business. On the other hand, their industrial segment didn't do as well. Sales decreased by 2%. That's not a huge drop, but it shows that some parts of their business are facing challenges. Their medical business is showing improvements. Medical sales went up 13%. It looks like their medical segment is performing very well and growing much faster than aerospace. The company had some expenses from restructuring. This is when companies reorganize to try to become more efficient and profitable. Sometimes it involves layoffs, plant closures, and other cost-cutting measures. The restructuring costs were $2.8 million. These costs will affect net income, so you need to keep an eye out. Maybe they can be cut. Cash flow refers to the movement of money in and out of a company. Positive cash flow means more money is coming in than going out, which is a good thing. This is the lifeblood of the company. They had a decent amount of cash flow from their regular operations. This is very important since if a company does not have cash, it will eventually not be able to pay its bills. Backlog represents the total value of orders that a company has received but not yet fulfilled. It gives you an idea of how much future work the company has lined up. MOOG saw an increase in their backlog. This suggests that demand for their products and services is strong. Their backlog increased to $3 billion. This provides some visibility for the future. There's a dividend announcement. Dividends are payments made by a company to its shareholders, usually from its profits. The company declared a quarterly dividend. This is usually good news for investors as it means the company is profitable and willing to share its profits. The dividend is $0.29 per share. Shareholders like to see these since it's cash directly to them. SDN, okay, so overall, MOOG seems to be doing reasonably well. They increase sales and profits. Aerospace and medical are doing well, but industrial is struggling a little bit. Also, the backlog is growing, which is a good sign for future business. Often, however, there are always risks and potential downsides. The press releases did not contain many of the core business risks, so let's go to the filing itself, which should have it. There are some legal disclaimers. This is a standard thing in financial reports. Basically, they are saying that some of their predictions about the future might not come true. That's the end of the document. Now, let's get to a quick summary of what's good and what's not so good about MOOG. MOOG is a solid company. Aerospace is a good business to be in since planes and space equipment need constant maintenance and upgrading. It looks like they have solid growth numbers and a rising backlog, meaning that people want to buy what they are selling. One thing to look out for would be their industrial segment. Is that going to keep going down? If it does, they need to figure out how to turn it around. One big question is if their medical business can keep growing so fast. Can they continue to sell into the medical market? Ultimately, MOOG looks to be on a good track, but as always, it's important to keep an eye on those key numbers. Thanks for watching Corporate Decoder. If you like this video, hit that like button, leave a comment, and don't forget to subscribe for more deep dives into the world of business and finance. Until next time.